I'm Milin. So today we have the privilege, right, to have another VOC members of ours, Donnie Kwa, to speak to us on listing your business. I think most of you may have known Donnie more than I do. I've just started to know him, especially the last few days when I try to get his profile. So and yes, Donnie. Just for the rest of you who doesn't know Donnie as just like me before this. So Donnie is the founder and managing partner of Donnie and Ong Advocates and Solicitors, a law firm located in Solaris, Tutamas. So I was telling Donnie also when I first read his profile, I'm really in awe because I find that he's actually the epitome of lifelong learning. For those who don't know him, right, do you know that he didn't even start his career as a lawyer in the beginning? Yeah, he actually started his career as a banker, all right? And his last thing in the financial industry was actually as a chief executive of a local merchant bank until his retirement. So here's the inspiring part.
Wow.
Yeah, he's really inspiring. He only started to pursue his law degree at age of 62 after his first retirement. And nothing stops him from learning. So as of today, he has been practicing law for 8 years now, right? He's also very active in involve himself in the KL Bar's corporate and conveyancing committee, and also allocates a lot of, his time to train members of the Malaysian Bar. You do take part by typing in your questions or comments in the chat anytime throughout the whole session. But we will get Donnie to answer some of these questions after his sharing. Okay, so without further ado, I'll pass on the session to Donnie to share with us about listing your business. Donnie, all yours.
Hi, good afternoon, everybody. The subject of floating your business is close to my heart because I started as a banking and was working in Hong Kong, and then I ran the merchant bank for Hong Kong and Shanghai Bank in KL. But the concept, the policy of flotation, listing your business, continue to be very close to my interests, and the concept of growth in the capital market continues to develop. Let's start with this thing. Going public, what does it mean? In simplistic terms, it means that you're changing the status of your Sdn Bhd into a Berhad. Basically, you're going from private company to a public listed company. Public listed because there is a term where you can be public, not listed. If you are a public company, if you have more than 50 shareholders under the Company Act, and in case of Berhad, you are also listed on Bursa Malaysia. The reason for requiring listing is basically it enhances visibility to raise capital for your future growth. It provides liquidity. And now you can issue more shares, and of course it also helps you to increase employees morale. The question here is, before you even decide whether you qualify for listing, you have got to ask yourself, why do you want to float your business? Because there are a lot of disadvantages in listing. There are a lot of stringent requirement, compliance requirement. Every little thing, the authority wants to know why is your share going, moving one way or the other, and you have to report your performance quarterly, and so on and so forth. And worse is you're dealing in your shares during the close or open season. You're selling shares or buying shares when you're not supposed to deal in your shares. And of course, you're also not disclosing certain price-sensitive matters. So the question now is, do you qualify? How do you qualify? The qualification for listing is for Security Commission is very straightforward. Most importantly, you must have a 5 years sustainable profit. And the last time I looked at it, it was for 5 years. Basically, the first 3 years, the past 3 years, you must have made more than 15 million, or the whole 5 years you can reach 15 million. So if you do not have past record, then your future record wouldn't count. But if you have got certain profit track record, they still want to know whether you can sustain that profit. So the number that they're looking at then is 15 million. And if you are a developer, they want to know whether you got a land bank. The land bank must be in, basically the last time I looked, it was almost like 1,000 acres. And land developers are mainly on the main market. Then to prepare for listing, you need a few things. You need to persuade the leading advisor that you are worthy of listing, and the lead advisor will liaise with the authorities, the SC, basically the Security Commission and Bursa, to get your prospectus approved, and for Bursa to want to list your company. And of course, in doing so, you must comply to the rules. The rules under for listed company under SC, and for under the Capital Market Services Act, and you must also meet the listing guideline provided by Bursa Malaysia. And there's this other thing that is most important. In order to get approval from listing, you must issue a prospectus, and that prospectus must meet the guideline given by Security Commission. So if you are a SME, you're a small and medium enterprise, and you want to grow, then there's very good reason to want to go for listing, and because it's for your expansion requirement, for working capital needs, and also sometimes it is your agreement with your venture capitalists for them to exit, because when they came into as your joint venture partner, there's always an exit plan. So those are some of the reasons why you are seeking to list your business. But my view here is, if you are such a profitable company, if you're making 3 or 4 ringgit in $1 of capital, you shouldn't list, because you should continue to milk the profit until you can't anymore, and until you really need the capital from the external sources to help you to grow. But the other reason for listing is, of course, your product scope. If your product is international, or you need certain exposure on what it does and what it can do, so listing give you a pedigree. It allows your consumer to understand what you're doing and who you are and where you're going. So there's also the consumer's aspect of your advantage of listing. So basically the authorities want to know how long you have been in business. What is the prospect of the profit sustainability? What is your management structure? Are you a single manager, or you have a full board, managers and other things? Basically, you need to also show that your structure of assets. What are your assets? Is it just a car, or is it the whole factory change? So before you even approach the professionals, you should ask yourself whether your business is viable, how you have managed your business, because when you go listing, the likelihood is you are giving up freedom and you are caught in a governance situation where you have to be transparent and have to report, and you have to come with clean hand. So if you are still in between a family organization, and then you should clean up your act before you even consider submitting for listing. Because the likelihood is they may catch you somewhere in terms of governance. You may have used company money for your family's need. So the first thing is to start planning for listing. You have to select your lead advisor. The lead advisors are mainly the investment bank, people like CIMB, Arab Malaysia, RHB, Hong Leong, and things like that. There are some broker firms like MAA who are also licensed to be principal advisors. Then you need to have your legal advisors, because you have to make sure that the contract that you have currently, whether they are long-term, what are the liabilities that you have, and what are the things that you need to disclose in the contract. Then you have things like the reporting accountants. You need them to make sure that the accounts that you are going to submit to SC are true and accurate. Cannot be hanky-panky, cannot be unclean or doubtful accounts. And if you are doing something like rubber glove, and then that's quite easy. You bring something that requires an expert report, so you need to get an expert's report, somebody that can do a market study on your product. You would need an underwriter, basically to show that the shares that you are going to market will definitely be taken up, if not by the market, by the underwriter. And then this thing called the issuing house. The issuing house are where people who want to apply for your shares will be paying the money to the issuing house, who will then distribute the shares, the successful application, to the individual issuing house under the CDS system. Then, of course, you need a placement agent, and then the person who apply, you need to have a depository account, which will be provided by you by Bursa or the issuing house. It's a lot of requirement that they need. Now, in terms of listing, which market? There are three main markets. The main market is where the MAS, the CIMB, the big boys are. They're Echo World, and then the other one is called the ACE market. ACE market used to be it was the second board, but the second board merged to the main market. So they created an ACE market. ACE market is actually sponsor driven and is basically on market designed for your own growth. So the sponsor have to believe in your growth so that he can then stand in front of you, behind you, in regards to the Security Commission and the listing agency. I think last year they have this thing called the LIP market. LIP market is an advisor-driven market. LIP is basically for company that don't have track record, and the placement, the flotation, the listing is to sophisticated investors. Some people who are knowledgeable about the capital market, who has, I suppose it's a very loose term, sophisticated investor, but generally is somebody who either has been dealing in the stock market, in the financial market, or who are educated enough as investors. Now, the most important part of listing is getting approval from Security Commission. So under the CMSA, which is Capital Market Services Act, when you apply for listing, you apply to Security Commission, but jointly to also Bursa. If Security Commission approve your listing, technically Bursa will also give you the listing approval. But in order to do so, you need to have a prospectus prepared. Prospectus are information on the document on the company, which is prepared mainly by the principal advisor, people like CIMB, NREC, Maybank Investment, and Hong Leong. They will peruse through all the documents that they need, from your accounts to the title to the land on which your factories are on, the machine that you have bought. It has to be full disclosure, and you cannot fake some titles, because the likelihood is they will find it, and once that's happened, the onus is on you to disclose fully. And if you don't disclose fully, you may be charged. It's a criminal offense if you apply erroneous information to the SC. So it must meet full compliance, and any non-compliance is a breach of the CMSA. And on top of it, if the principal advisor is a party to that fraud, the principal advisor will also be suspended from submitting future applications. So all along the way, every party that is part of your listing will be very, very careful, and they will be very stringent in regards to information that you provide. There was a case where I did some time back. The factory was on 2 pieces of land, but for whatever reason, there was an extension. We went to another piece of land which was not owned by them. For that reason, the whole system, then the CF was given, which was inadequate. So SC found that because it is erroneous enough, they didn't approve the listing. So even a certificate of fitness, land title, factory layout must be on the land that you own or you lease. It mustn't stand illegally on someone else's land. Things like your contract, the material contracts, the property, plant and equipment, your major customer. If you rely on one buyer, then they want to know what are the mitigating factors in the case your customer disappear on you or move. And then likewise, your major supplier, what are the risk factors? And if you are doing something with your subsidiary, then they want to know your related party transactions. And if your directors are involved in the company's activities, whether there's a conflict of interest, or if you have directors that also sit in a competitor's board, they want to know whether there's a conflict of interest, or they may actually insist that that director resign. So that is very, very tedious and very stringent. And of course, financial information, it has to be audited. Audit will be done by the top 10 audit firms in Malaysia. Some of the second board age market may be from third and fourth, the second 20 accounting firm, but they still want to know who is auditing your company. And the question is it a full or a limited audit? Because there are a lot of arrangement being done in the market. Sometimes the auditor said, you're paying me a very small sum of money. I can't do a full audit for you. So you do a limited audit, and they need to know. So your accounting, reporting accountant would have to inform what is the aspect of the audit that they have carried out for you. And of course, as in the 5 years track record, you need to show your next 2 years whether you are the pro forma and comprehensive income and cash flows, whether they are able to make and sustain the profit that you have made the last 3 years. And of course, they want to know your share capital, whether it's preference shares, whether it's B class shares, whether it's ordinary shares. So everything has to be fully disclosed. And even things like option, whether there's any option given out to people and whether it's disclosed. Now, how do they market your shares if you want to go listing? First, there's this thing called public issue. In other words, this will be new shares that your company will be issuing to the investors. And the money that come for the new share will go straight into the companies, to the listed company. There's also a private placement. In other words, the private placement are from shares that you want to sell because you want to divest. And that is from you. You have to disclose whether if you have 100%, you may want to sell 30%. So you have to disclose that you are placing out 30% of your shares to the general market. Then you also have offer for sale. Offer for sale may be from a third party in your organization, like the venture capitalist who wants to exit. So that those shares can be put into the listing vehicle to be offered to investors. Today, if you have read, the SC has issued a new, what they call enhanced IPO framework, which is going to start in January 2021. Basically, it is a more stringent, more holistic submission. It's a pre-submission where SC and applicant, the principal advisors, lawyers, reporting accountants, and valuers will partake in discussion on material issues prior to the submission of the IPO application. So they, on one hand, they want it to be when by the time you submit, they know everything about you. They will be going through quickly. But on the other hand, they want you to disclose fully. So for whatever reason, I believe in that pre-submission, if you do not disclose, your advisors and your professional will be caught for non-disclosure. And the responsibility is quite serious. And they need to make sure that the governance that you have is equal to the industry's gatekeeper. It must be maintained. But at the same time, the good thing about this enhanced IPO is that it expands the number of qualified professionals who can become principal advisors. It need not be the merchant bank, it need not be the stockbroker or the licensed advisors. It can be even Donnie and Ong now can apply for you if we feel that we can try to apply for a license, because they expanding the market to a wider range of professionals. These are some of the information on the listing. The last thing I found is this company called TCS Group. They wish to raise 20.7 million. Their revenue is 103 and group revenue is 358. So basically the compound average growth rate is 52. So it's very good growth. Their PAT, price after tax, is 5.1 to 15 million. So that's within that range. Basically the money raised is for this thing. 20.7 is for special purpose. Then there's a 3.5 for listing purposes, working capital 4.2. But you notice that the offer price is only 23 cents. In the old days when I first started, all offer price are over a ringgit. Some maybe two, but now basically the market has shrunk tremendously, and you can see they can only raise 20.7 million, whereas in the past you are looking at 200 million, 100 million, 80 million sort of range. Now, in the lead market, it is sponsor driven. It is to elite, sophisticated investor. You don't need to issue prospectus. It's info memorandum. Info memorandum is basically loosely prepared by the principal advisors. The directors are responsible for the information provided. The advisor is responsible for accuracy. And Bursa and SC do not take responsibility for the information provided. So it is quite a relaxed sort of listing. Now the purpose, this one we have gone through. Now this is another listing by IPO for, but they say they are issuing 30 million shares, but at 10 cents. And the reason why, again, they are only raising 3 million. The whole trouble is going to the lead market. The cost of listing is almost 1 million. So is it worth it, to raise 3 million and pay 1 million? I don't think so. But the other reason why people will go use the lit market because they want to they want to be recognized as a brand so that they can go to the bank and get more loan or whatever. These are some of the listing that was recently done. You can see that the issue price is between less than 30 to almost 20 cents. And the amount raised is, the biggest is Ace Innovec Asia, which is 10 million. The rest is 2 or 3 or 5 million. Nothing to shout about, but they are seeking listing for whatever reason, but it's just to me, it's a waste of time. I mean, you could get your money from private investors and other things, but listing must be a reason why they have been persuaded, or it is something that their venture capital wants an exit plan for their investment. That's about it. I'm trying not to be too complex or too detailed because it's a whole lot. The work for preparing you for listing, for going public, can almost take 9 to 18 months. So it's a long process. The prospectus, the information memorandum, the due diligence that have to be done, both by the legal firm and the financial due diligence, can take easily 3 to 4 months. And you have to be very current in your due diligence, and you have to also look at post-submission due diligence. If there's something that you only discover after you have submitted, you're still liable to action taken against you if you do not disclose something that is important to the authority. So that's why it costs for main board, the advisors, the listing fee and advisory fee is about 3 to 4 million. For lit market, minimum is about 1 million to 800,000. And a lot of it goes to underwriting, to the issuing house, to securities, to payment, to listing, payment to SC, and when they do their processing, they also charge you a fee. So all these things have to be taken account to before you think you want to list, and it must be worthwhile. So the good question that you ask yourself beside, or you ask your advisor is, do you think it's worthwhile for me to seek a listing? Or should I wait and grow organically with my own capital, with friends that can help me, and then we can list on the bigger platform and justify the fee that have to be paid. Thank you, Milin. Yeah, that's it.
Yeah. Thank you very much, Donnie. Yes, to the rest of us, do we have any questions for Donnie? Especially for those who are, always been wanting to list your companies, and now, actually, thanks again, Donnie, for sharing a lot of things that, the things for us to watch out for, especially the things that we have to consider. Anyone has any questions to Donnie?
I hear earlier on about qualifying for listing. You said something about there's a figure that, let's say 15 million profit. I hear that it's like, is it a past or future combined, or can you elaborate on that about the profitability, minimum profitability before you can go listing, things like that?
The standard they take in regards to profit is 5 years, okay? So 5 years means when you apply, you have would have got 3 years past profit, but then they want to know the next 2 years. So the combined 5 years should be about 15. So if you are growing 1, 3, 5, then you should be increasing. If then you 1, 3, 5, 1 and 2, then it's dropping. Then they think, hey, your profit's not sustainable. You may have been using your capital gain, not a operational profit, to get your calculation of your profit. So they would want the reporting accountant to clarify what is the parameters of your assumption in your pro forma statement.
I see. Okay. Interesting.
Yeah.
Anyone else?
Yeah. Anyone else?
Just for your information, we talk about past. For instance, if you remember Tai Tong, remember Tai Tong restaurant? Famous Tai Tong in Imbi?
Yep.
Do you think a restaurant can go listing? Basically the answer is just like trading houses, like basically services, like restaurant. The answer is no, because you depend on your cook, you depend on your recipe and so many things. But Tai Tong was able to go listing. How? They started to have a manufacturing process for their char siu bao, their chi yong fan and everything, and then they place it out. So they have a manufacturing arm to the service. So then they were able to go listing, and after they got the listing, Vincent Tan or Danny Tan took over Tai Tong. And of course, after that, Philip Siu bought back the Oriental Group and all, but basically he went back to services restaurant, but they created a manufacturing arm. Like for instance, they are mooncake, but they have a mooncake, one season they make the whole year's profit. So basically, but you can't have a one product to be your listing vehicle because it is deemed to be risk adverse. Market won't allow that. Likewise, trading company in the early days, people like Bowstate, like some of the English company, they were allowed to go listing O'Connor because they are trading company, but because we were then building our stock market, they allowed that. Subsequently, they stopped because trading, you depend on your managers, you depend on your product. Your product may be withdrawn from you. The managers, they're supposed to do your marketing may no longer work with you. So it's basically the prospect is very iffy. So for that reason, they won't, just like they won't allow the lawyers to go listing because you may lose. After I go listing, I take the money, I retire, I go off. Who is going to stand behind the profit? So for that reason and that reason alone, they are very careful in what sort of industry they are to list. Even housing developer, they will not allow you to list if you don't have a land bank. If you're a construction company, only a very few construction companies are listed. The rest are all privately owned or subsidiary of listed companies. Like hardware shop, they're trading, so they are not. Even though you got a license from IOI, you're the biggest agent in Sabah, but you are still subject to losses. You may lose your agency tomorrow. So they want to be sure. They want to protect the market. So that's the reason why hospital again depend on the doctors. But hospital have two factors. They own the hospital, they own the machine, they own the bed. But then they subcontract the clinics to doctors. So that is how people like KPJ, IHH, and some of the healthcare are doing it that way. There is certainty in your income. Like, for instance, merely your training thing. So you can list, but you have to find a way of splicing your income to make it sustainable.
So meaning that if, let's say, I have a training center, then that is a possibility.
Training center, look at help, right? College, it is school is a college. It started and then it went this thing. Paul Chan, went this thing, but basically it took a while. They have to build their student population from 500 to 1,000 to 3,000. Sunway is the same. Sunway College started as a small, then the tertiary education became a major factor, and then their fee base, so they can guarantee continual growth in the student population. So their SC is very stringent about how they view your income, and they may want, if you have got 20 university affiliated to your college, they will do due diligence to make sure that you are good for that 20 licenses, because your license give you credits to get your student population, to get your revenue. Likewise, your training, you have to show that you have a core company that needs your training all the time.
So it's not necessary that we need like tangible assets to ensure that listings. Example, because I think for training company, it's a lot on IP. So that won't be considered as something that is, acceptable for listing.
For instance, if you are the sole agent for Alibaba in Malaysia, okay? You make tons of money, but the likelihood of you getting listed is low, simply because tomorrow, even you have a 5-year or 8 years contract with Alibaba, it's not permanent unless you're able to do a web that generate sales. Then you may have or you do some logistic that is big enough to support Alibaba. But otherwise you are leaning on Alibaba, then it's not valid. Likewise, insurance agent, you are insurance for say AIA, you got a big team, you are gold medal class, but the team can come and can go, right? So for that reason, it is service and not, basically you are in the business, you are SME, but you not likely to be able to get approval for listing.
I see. Just for study case, you said earlier on most construction companies it's difficult to get listed, but except for a few. So what are the differences with these few that got listed?
A good example would be what is the name? Okay, you just look at I'm older than all of you. I started in 1980s and 1990s. Renong, you remember Renong?
Renault.
Renong, right? You remember UEM?
Yes.
United Engineer?
Yes.
Yep.
They were all engineering company.
Yes.
They're the same. But Renong came in on the back of, that highway, the North-South Highway.
Yeah.
It was only a piece of paper, a letter from Ministry of Finance to say we are going to build North-South Highway, 400 kilometer. Based on that, they bought Renong. Renong went with a letter, a piece of letter. He got to the bank, he raised capital, he do rights issue and all. It became big. And then they split the thing into, they can build bridges, they can do the tarmac, they have tarmac, the tar manufacturing, there's concreting, the bridges, the halfway, the R&R, a lot of things, and then they sell franchise to Shell, to the petrol company, to lease whatever they have in the rest place. And at the same time, parallel to the road, they got allow you to put advertising board. Each board is 200,000. So can you imagine 400 kilometer either way, how many boards can you have? Those are all assets. Because the question is basically, I can count that as assets. So I can sell potential.
Interesting.
And then, of course, the toll. Then now the toll collection is a cash cow now. It's so much money that what's the toll company become a GLC, become a dividend earning company it's a revenue to government. So that's how it can be structured. Everything can be structured. Even in the early days, the power plant, they give you a letter to say, I allow you to have a license to construct a power plant. So based on that license, you go to a few companies, you go to Tenaga to do an offtake agreement. You go to ABB, Asia Brown Brewery, to look at what are the generator you need, and basically efficiency. Then you sell the electricity that you produce to Tenaga. That becomes an offtake guaranteed agreement, guaranteed sum. And then of course, to build the power plant, who do you build a power plant? Any Achong and Ahmad cannot build a power plant. You got to have a construction company that can give you a completion guarantee. Big company that can guarantee, and then they know where to lay the cable, create the process. As a result, they on completion, when you turn on the button, you create electricity, you harness it to Tenaga. Tenaga will pay you 10 cents, 15 cents, 20. During that time, about 18 cents to buy your electricity.
Milene, I think Josh got a question.
Yeah. Donnie, Josh has a question. He's asking, right, if the income from overseas can be considered as, for the listing.
Income from overseas earned by your company, yes, depend on what is the income. Is it sale? Is it agency? Is it what is it from?
I'm thinking of rental income.
Rental income.
Yes.
Landlord, you are landlord.
Yes.
Basically, rental income has been tabooed for a reason that rental income has two aspects. Because, like for instance, you look at Hong Kong, Cheung Kong, Hutchison, they are all property earners. They also develop. They also collect rent. Like Hong Kong land is more a landlord than anything else. But they have other subsidy that earn. So the whole thing is a composite of revenue that adds up to give permanency that you can sustain. You can sustain your income. So your rental income, if you list your rental income, there's no growth. It will be very common, if you're earning X, it become X through, there's, subject to inflation. Your investors are not keen to buy from your shares because the growth is already known. It's just like you are selling fixed deposit. So you might as well do a REIT, Real Estate Investment Trust. You lump up together, list your rental. You can do that. So
Okay,
if you
thank
have, you have that, you can do that. Like some of the, like UOA, right? UOA did a lot of REIT. Hong Leong also did REIT. UOA created REIT for Bangsa South. And they make a lot of money there, Yeah, everything can be structured. It's just you can REIT partial of your income into REIT, and then you don't sell the property, you share your profit, your revenue. Yeah, that is another part of listing. It's not just it's also your revenue. Yeah. If you have
okay, thank you for the answer.
For instance, if you know the Muhyiddin PM, you go and get a privatization. Say the last time Tan Sri Robert Tan did, he privatized the servicing of all government cars at a fixed price per annum. And based on that, he listed his part of his vehicle to form part of the revenue. So it's just that you must be somebody who is known to the investors, who is known to their principal advisor, to want to take on that matter.
Great. Yeah. Anybody else has any questions? Yeah. Otherwise, yeah. Thank you very much again, Donnie. I think, you've given us an insight and overview, as well as pointers to consider before even we go into listing. Thanks a lot. Yeah, and for those who are who wants to find out more, who to ask advice from. I think Donnie is somebody who is not only understand from the legal aspects and also his experience as a merchant banker once as well. Yeah, thank you very much, Donnie. Yeah, Daniel, anything else to add on?
Thank you. Thanks, Donnie. It's been very, very insightful, actually. There's a lot of things actually in listing.
No, basically, the main thing is if you are making 3 ringgit in every dollar, that means you're making 300%. Why want to list?
Yes.
Tell it yourself. It's when you are starting to lose your 3 ringgit to you're only making 50 cents in the dollar. Then you want to exit. You want to take profit. That's when you most people start to list, because then that's how you exit and take some of the money out to do other things.
Right.
So you always have an insurance on the thing. But if you're making $3 in a dollar, I mean, a lot of my friends, they have so much land, they refuse to lease, because when you lease, you are subject to so much regulation you have to report. And then if you do something wrong, they will have the police, the MACC, whatever it is, to investigate. The tax, you have to do you have to be, when you lease, that's one of the interesting thing about leasing in the old days. When we lease, you have to report profit, right? So most Chinese company have 2 books. So because you want to lease, you have to declare your profit. Some declare more, some declare properly, which means that you have to exit, you have to appear and pay your tax. Because when you're declaring 10 million the last 3 years, you have to pay tax. So that is another reason why you have to look very carefully. If you are making so much money, you got a tax advantage, you're tax efficient, you're not evading tax, don't list. Then you can still use the company money to play golf, to go holiday with to take Daniel for dinner, whatever it is. It's,
Can already. Thank you so much, Donnie.
okay, good.
Thanks.
Okay, good. Who's that?
That's Theo, is it?
Theo.
Yeah.
Theo, suddenly you.
Theo, hi, Theo.
Yes.
Hi. Thanks for the session. Very informative.
Okay. Anything else, you just give a call. I mean, we are happy to help.
Yeah. Okay.
I got some colleagues who are still in the business. We can also do your due diligence. And the other thing we haven't discussed is there may be a Bhumiputra quota. Then your board may have to have X number of independent directors.
Okay.
But listing is still glamorous, because you can get your datorship and your Tan Sri, much easier. If you need it.
Okay. So,
Yeah.
so thank you so much. I think it's been fun. I'll see you next week. Next week is the event for the golf, for the monthly golf meeting. Okay, we announce shortly the location and all that in a group. I hope to see you guys there, man.
Okay, good.
Okay,
everyone.
bye-bye. Thanks, Donnie.
Bye. Thank you. Bye. See you
Bye.
guys. See you next week. Bye.
Thank you.
Thank you.